Ben Franklin said, "You may delay, but time doesn't."
I'm here with John Neal. I'm Michelle Voskel. We're with the Neal Group. Today we're going to be talking about tax deductions you might still be missing and how you can be sure you include them in your taxes for 2025. So first thing we want to talk about is what are some of the most commonly missed things that small business owners don't include in their records for the end of the year for us to be able to prepare the taxes. So John, what kind of things do you think there might be?
Well, I think one of the big things that's overlooked for many businesses is a retirement plan. They think that they have to be a big corporation to have a 401k plan or a pension plan. Their employees may not be interested in having one, but there are ways to set up a retirement plan and contribute just for yourself. Other deductions, we hear a lot of people talking about home office, whether they can deduct it or not, whether they can deduct their cell phone. Then I think one of the big surprises that people have is they can employ their children, especially if they're a sole proprietor filing what's called a Schedule C on their personal tax return. It's a great way to help save for college, get money out of your tax return, and possibly have it tax-free on your children's tax return.
To add to that, one thing about the home office deduction, you do have to be self-employed. You cannot work for an employer and get a W-2 and then be able to take a home office deduction. Is not included. It doesn't work that way. Okay, so how can tracking expenses differently help uncover deductions that small business owners might not have thought of?
We always tell business owners just to keep track of everything that they can that may be business related. We'll sort it out later. They don't realize that the trip to the post office or having coffee at Starbucks with a referral source is deductible. And if they keep on top of it from the beginning, it's easier to gather all that information when it comes tax time.
Great. So one of the risks then of waiting until tax season, you sort of just identified.
Yeah, it's interesting. I was doing some reading and Ben Franklin said, "You may delay, but time doesn't." So if you put off getting everything together, then all of a sudden, and I'll take it to the extreme, on April 14th at midnight, you're gathering all your documentation, you're missing receipts, you don't know whether this deposit was income or money that you borrowed from somebody, and you just miss out on a lot of stuff. So it's always better to do things throughout the year rather than wait till the end.
The other thing people should be aware of is that estimating is not a good practice. The IRS does not like to see things with zeros on the ends. They literally like to understand your business is really keeping track of those deductions throughout the year.
Yep.
John, I think you might have touched on this already, but can you share another example of a deduction that might have surprised one of your clients?
Yeah, as I said, it's a toss-up between a few, but probably the biggest is being able to pay your kids in your business, have it deductible by you, and depending on how much you're paying your children, it's not taxable to them. The best way to do it is to be self-employed and filing what's called a Schedule C, because then your children under 17 don't have to pay Social Security or Medicare tax on it. However, even if you are a corporation or a partnership, it may be beneficial to pay your children because it gets that money out of your tax bracket and a lot of times it's tax-free to your kids.
Excellent. That is true. I have suggested that to quite a few clients, and they understand it and they like it. The other thing I wanted to ask too is how, with the NEO group, we are involved a lot during the year. People will call us and ask us questions. So, what is one thing that you would, or a couple of things that you would tell them they should do before year end?
Well, I think one of the big things is just to communicate with your accountant. You need to know what's going on. Hopefully you've kept your books current, and just sit down towards the last quarter of the year and go, here we are. Should I be making any moves before the end of the year? If I don't, how much am I going to pay in taxes? A lot of times it's kind of illogical, if you will, but not spending money can actually keep more money in your pocket.
That is very true. And we also provide a checklist for many of our clients. Actually, we could do it for all of our clients. We give them a checklist that they can keep track of all of their expenses, understanding what is available to them, and we do very well by giving them checklists and keeping them on track for the entire year.